How to determine cost of capital, and that's your question number 11. Cost of capital determination will depend as to which is the source of capital that we are talking about. So if we are talking about cost of debt, then the cost of debt is going to be equal to the rate of interest that we pay on that debt minus the tax saving that we will have as a result of the tax rate. So for example, if the rate of interest on a debt or on a debenture is of 10%, and if the corporate tax rate is 30%, so what is going to happen, since your corporate tax rate is 30%, you will have a saving of 3% of the interest cost. That is 30% of 10%, which is 3%. So you will be paying interest at the rate of 10%, but you will be saving tax at the rate of 3%, and therefore net what will go from your pocket is 7%, and that is how it becomes the cost of term loan or cost of the debt or any of the debt instrument for that matter. How will you determine the cost of preference share capital? Very simple. Preference share capital, whenever a company issues preference share capital, it will always say as to what is the rate of dividend applicable on that preference share capital. So the rate of dividend in case of the preference share capital becomes the cost of preference share capital. Now, how do you determine the cost of equity? Now that's a question, and for determining cost of equity, interestingly, there are so many options available, and that also happens to be your question number 12. That is how to determine cost of equity. तो मैं आपको बताऊं कि कॉस्ट ऑफ इक्विटी डिटरमिन करने के लिए अगर आप फाइनेंशियल मैनेजमेंट की कोई भी बुक उठाएं तो आपको 15-20 उसमें मॉडल मिल जाएंगे जो कि आपको कॉस्ट ऑफ इक्विटी को कैसे डिटरमिन करना चाहिए ये बताएंगे. बट लेट मी टेल यू, ऑल दोज मॉडल्स आर एब्सोल्युटली रॉन्ग. एंड वाई दे आर रॉन्ग, एंड दैट इज़ बिकॉज वो जो 10-15-20 मॉडल्स जो आप देखेंगे फाइनेंशियल मैनेजमेंट की बुक्स में, आप देखेंगे कि जब आप किसी कंपनी की कॉस्ट ऑफ इक्विटी कैलकुलेट करेंगे यूजिंग दोज 10-15 मॉडल्स, व्हाट इज गोइंग टू हैपन, all the 10-15 models will give you a different cost of equity. It means what? It means something is wrong somewhere with all of those models. Otherwise, at least 2 models will give you the same answer, and that is what is not happening. And therefore, using any of those models which are given typically in the books on financial management will not let you know as to what is the cost of equity. The best way to determine cost of equity is to find out what is the expectation of the investors of the company, and that is the cost of equity. अगर मैं किसी बिजनेस में पैसा लगा रहा हूँ तो उस बिजनेस से मैं कितना रिटर्न कमाना चाहता हूँ, that is the cost of equity capital. Now this is simplest of the answer as far as how to find out the cost of capital, because that is what is cost of capital. So my opportunity cost is my cost of equity. That is my cost of equity. The problem is a company that we have today all over the world, any company that we have anywhere in the world, all those companies have lakhs, thousands and lakhs of shareholders. So if a company has got thousands and lakhs of shareholders, then every shareholder, every investor will have his own expectation to find out own expectation in terms of return. तो वो एक जो 10-15-20 लाख शेयर होल्डर्स हैं किसी कंपनी के, तो उसमें कुछ लोगों की एक्सपेक्टेशन 10% की हो सकती है, कुछ की 12% की हो सकती है, कुछ की 15% की हो सकती है, कुछ लोग 9% में भी खुश हो सकते हैं, कुछ लोग 20% चाहिए, एंड सम पीपल इवन मे वांट अ रिटर्न ऑफ 30%. So that is where the problem is, because expectation of the investor is the cost of capital is understood. So long as there is only one investor. But if there are myriads of investors, then how you determine the cost of capital? And that is where what you do for determining the cost of capital, cost of equity capital, what you do, you use something which is known as CAPM model, capital asset pricing model. And this is what we have discussed already, and therefore I am not covering, but just to give you a reminder that cost of equity को कैसे determine करते हैं. Cost of equity को determine करते हैं by using the कैपिटल एसेट प्राइसिंग मॉडल। एंड मैं आपको बताऊं कि पूरी दुनिया में कैपिटल एसेट प्राइसिंग मॉडल is the most frequently used model for the purpose of determining the cost of equity for any business. And why it is so? And it is because because CAPM model, capital asset pricing model, takes into account all the relevant factors for the purpose of determining cost of equity. It takes into account the risk-free rate. It takes into account risk of a company in the form of beta. It takes into account the market rate, and it also takes into account the market premium. Since it takes all the four factors which are relevant for the purpose of determining cost of equity, and therefore all over the world, CAPM model is most frequently used model for determining cost of equity. Question number 13. Cost of equity will always be higher than the WACC. Is this true? If no, then why not? And if yes, then why? I am sure all of you will understand it very easily. So cost of equity will always be higher than the WACC. And is this correct? And the answer of course is right. And why the answer is right? And that is because we all understand, we have discussed it so many times, that equity is always more expensive than debt. Equity is always most expensive among all the sources of capital that we use for financing our operations. And what is WACC? WACC is a combination of the cost of equity and as well as cost of debt. Debt is cheaper than the cost. The debt is cheaper than equity, and therefore, when you take the weighted average cost of capital, combining the equity and debt, because debt being cheaper than the equity, the weighted average cost of capital is lower than the cost of equity. And that is the answer for question number 13. Question number 14. Why cost of equity is always more expensive than the cost of debt? Why cost of equity is always more expensive than the cost of debt? There are many reasons for this as to why cost of equity is always expensive than the cost of debt. The number one reason is cost of debt is after adjusting the benefit of tax saving as a result of interest payment. Interest, remember, on the loans that we take is tax deductible, and therefore, as we were discussing earlier, whenever a company is borrowing, it pays interest, and when you pay interest, you save on tax. So that is reason number one as to debt by default becomes cheaper because it gives you the advantage of tax saving. Number two, debt is not a risk capital. Equity is a risk capital. The lender who is giving you money, remember, is taking far lesser risk than what the equity shareholders are taking. And lenders, whenever they would lend money, in more often than not, they will lend you money by taking enough security in terms of mortgage on your assets or in terms of personal guarantees or the corporate guarantees. And that is not the case with the equity share capital. Equity share capital or equity shareholders, they do not get any kind of security whatsoever. And therefore, obviously, their expectations of return is bound to be much more than the return expectation of the lenders. And that is the reason, these are the two prime reasons why cost of equity is always more expensive than the cost of debt. Question number 15. What is capital asset pricing model? And answer of course is capital asset pricing model is a model that helps you to determine the cost of equity for any company for whom you are trying to do the valuation. Capital asset pricing model, remember, as I said a little while ago earlier, is one of the most used model for the purpose of determining cost of capital all over the world. And that is your CAPM model, capital asset pricing model. Let me tell you friends, it appears to be a very complex model, but when you apply it, you will find this is one of the simplest model of determining the cost of equity, and that is the reason why it is more frequently used also. Question number 16. What is modified CAPM? सो व्हाट इज मॉडिफाइड CAPM? मॉडिफाइड CAPM का मतलब है कि जब आप व्हेन यू ट्राई टू फाइंड आउट द कॉस्ट ऑफ इक्विटी यूजिंग CAPM, what you will do, you will take the risk free rate plus you will take the beta and then you take the market return, and from the market return you will minus the risk free return, and this is your formula for determining your your CAPM model, or determining cost of equity by using CAPM model. Now ये जो आप CO cost of equity workout करते हैं using CAPM model, sometimes you realize that this CAPM model is fine for an ordinary company or a normal company. In certain cases, certain companies for certain reasons may have a company specific risk, and that is why what you do, you add some more premium or into the CAPM model, and then it becomes modified CAPM, or that means what you do is company specific risk premium. So what you do is you add is company specific risk premium. So in your CAPM model you add company specific risk premium, and then this is known as modified CAPM, modified capital asset pricing model. And that's your question number 16. Question number 17, what is beta? What is beta? Now beta, I'll just come to you. Just give me 2 minutes. Just give me 2 minutes. So what is beta? Beta is an indicator of a risk of a company vis-a-vis the return from the market, and that is the beta. So beta क्या बताता है? Beta बताता है relationship between the risk of the company and the risk of the market. So say for example, if beta of a company comes to 1.5, इसका मतलब क्या है? इसका मतलब ये है कि beta of a company which is a part of the Nifty 50, a company which is part of Nifty 50. Now the beta of this company which is part of Nifty 50 is coming 1.5. Now what does it mean? It means अगर ये निफ्टी इंडेक्स 1% से बढ़ती है, तो 1% से इंक्रीज होती है निफ्टी, तो ये कंपनी का रिटर्न 1.5% से बढ़ेगा, बिकॉज द बीटा इज 1.5. लाइकवाइज अगर निफ्टी 2% से नीचे आता है, तो ये कंपनी जिसका बीटा 1.5 है वो कंपनी 3% से नीचे आएगी. सो बीटा इज द रिस्क रिलेशनशिप between the market return and between the return of an individual stock, and that is what is your beta. Yes sir.